What's going on, everyone? Nice to formally introduce myself to everyone. My name is Hamza Hamid, and obviously Hamid Trades, right? So, yeah, I got a haircut recently, and I was like, you know what? I think it's time to start showing my face a little bit, not put the haircut to waste. So, if you guys haven't seen me already on Instagram or TikTok, then yeah, like this is the first time you guys are seeing me. And also, I wanted to eventually start doing podcasts as well. So I needed to get into the groove of showing my face or, YouTube videos and not, feel awkward or cringed when I do this stuff. So yeah, if this video is like out of the norm, I'm talking a bit weird, bear with me because this is like the first time I'm doing this sort of stuff. So yeah, man, in today's video, we're going to go over the SPY. We're going to go over the NASDAQ. We're going to go over the IWM 30-year bond. Of course, earlier today, in the morning, we alerted some plays. Where were they? So these, obviously, we alerted them in the morning, and within 10 minutes, they were up 15%. I said, take some profit, set a trailing stop loss to remain in profit, and then eventually afterward, they ended up hitting 20%. Those were good. And then, like I said, today was a day of patience, right? So we needed to be patient, waited until the market basically made its lows. And I'm going to go a bit more in depth of why I wanted to take this play. Even though towards the end of the day we were closing below levels of support, I want to explain my thought process behind this play. And currently the calls that we bought are in the green, and this play is also working really, really well. All right, so let's get started with the video. And by the way, I post everything completely for free, so definitely go ahead and check all that out. All right, so just blindly, before we go into detail about any technical analysis, whatever, right? Here's a chart of the NASDAQ, okay? The NASDAQ was down 4% today. At the time I alerted the calls, the NASDAQ was trading above this level of support at 355.56. Cool. That didn't really mean much to me because it all really depended on Amazon's earnings. But one of the main reasons why I decided to alert those longs and not, remain patient, I wanted to alert because it is so, like, I've never seen a day where the NASDAQ could be down over 3.5%, especially right now, it closed 4%, that we wouldn't see a bounce. So we can go back and look at any huge red day. So even here, that was 2%. And then, that was an extra day afterward. An intraday drop of 4% is so, I can't even find one. Like, all of these drops were only like 2%, like, let's check. This was 2.6, 2.7%. What happened the next day? We ended up going a little higher. All right. So, again, what is this? 2%. Next day, we ended up going a little higher. Huge red candle here. 3%. This was a nice little 3% drop. If you had bought afterward, so say for example, you bought at the close, 386, we ended up hitting 388.92 the next day. So regardless, these calls would have been in profit. And 4% is obviously a huge drop. We can go, honestly, I want to look for nice, huge red days. I can't really find any right now. All right, so closed here. All right, okay. This isn't the COVID crash, but we would have bought this dip as well because you already know we buy huge dips and good opportunities. But anyway, yeah. So during the COVID crash, it's different story because we would be algorithmically overextended to the downside, and you already know we bought the dips, the most recent ones. So we were already on the good side of the market. So yeah, you can see right now. Yep. So you can see right now that the NASDAQ is at 360. I alerted these calls at 355. So they were up pretty substantially. I alerted them at $3. I ended up taking some profit at 3.7. I alerted them. at around like 410, 411, whatever. But yeah, that was basically the main reason why I alerted these plays. When we are down that much, it's highly, highly unlikely that we don't bounce into the next day. And especially when we're trading within the range of the Bollinger Band and within the algorithmic center for where the stock market is supposed to be trading. So when we have a huge down day like that, it's almost impossible that we don't have a green day tomorrow. All right, so there's my rationale behind that trade. Let's go ahead and take a look at the technical analysis for the overall market. So currently, Amazon had amazing earnings, and Amazon is up to above 3,200. It's up 17% in the after hours, and basically they beat earnings. They beat earnings expectations. AWS, the cloud service, had more. It made more money than estimated, so that was another reason why. And they increased the price of like Amazon Prime yearly subscription to $139 when it was $119 prior. So, you know, they had some really good news, and we can clearly see that Amazon is up $474 right now in the after hours. So that's basically fueling the rest of the market, right? So we're back here now. The SPY is at 451. Again, it's not necessary that we open this high regardless, right? But the fact that Amazon had positive earnings, it means that the market is going to open green, most likely, right? So currently, you know, we have these levels of support at 450.37, and then this very important, you know, level of resistance at 451.16. So these are going to be like the main levels for tomorrow on the SPY. If we can comfortably continue trading above 451.16, that's a good opportunity to continue going long, right? And then what we really want to see is for us come back and trade above this trend line. So what I was saying was, after having a huge uptrend like this, right? It's completely normal to have a red day, to have a day where we come back, retest levels of support, give people the opportunity to take some profits, and then continue going on higher. So this would, you know, this is a potential, obviously it's not the most clean bull flag formation, but this is a normal consolidation period for a potential continued upward move. All right, so that is what we were doing in the short term. Again, you know, we have to take things day to day. I'm not saying that we're going to see new all-time highs this month, obviously, but I was bullish because we fell so heavily on the NASDAQ. And I've never seen a day where we don't have a green day the next day after falling that heavily. And Amazon also earnings, you know, we fell really, really heavily on Amazon, and it worked out. So yeah, so these are the levels for the SPY. So the main level of resistance for the SPY tomorrow is going to be approximately 455.20. So if we can close above 455.20 tomorrow, that's basically going to show that the SPY has reclaimed this uptrend and this resistance line. And then the next level of resistance afterward is going to be 457.36. So those are the main levels of, those are the main levels of resistance. Technically, it was not favorable. Technically, this was not a favorable opportunity to go long. We can see that the MACD, on the SPY is pointing downwards, extremely overbought. And we had a red day. So obviously, you know, the fact that we barely made a blip to the downside on this MACD line shows that there was still potential huge room to the downside. All right. So right here, you can see that it barely moved downwards, yet we fell very, very heavily and dramatically. When that is usually the case, we're supposed to continue falling lower. Okay, that would be a continued move to the downside on the MACD, but you can see that, you know, Amazon earnings and the fact that the NASDAQ closed so low today, it was an opportunity for banks and hedge funds. They saw that as an opportunity to go long. And yeah, the RSI, you can also see the RSI was not favorable to go long either. So in normal conditions, this would not have been a good buy. But the only reason why, so for example, if the NASDAQ was not down this heavily, if the NASDAQ was only down 1%, I would not go long the SPY, or I would not go long the market. If we were only down very, very slightly, like over here, there's no reason to go long because these indicators are very, very bearish. But, you know, overextensions to the downside makes these indicators not plausible sometimes. And especially when Amazon crushes earnings as a $1 trillion company, it's another really, really good sign. So those are the levels to the upside for the SPY. Let's go ahead and take a look at the IWM. All right, so here's the IWM, right? Obviously, we can see clearly that we closed below this 200 level of resistance. Very clearly. This was not a bullish close at all, right? That's why I didn't really bother too much with the IWM. You can see that the indicators were also extremely bearish. And the RSI is pointing downwards. But something that I wanted to look at on the 4-hour chart was it looks like the IWM is making an inverted head and shoulders. And you can also see that the MACD on the 4-hour chart is extremely oversold. So that is basically the similar situation on all of the other indices. The 4-hour MACDs were extremely oversold. So that was like a really good opportunity to go long, in my opinion, as well. So currently you can see that the IWM is obviously going to be a bit green as well because the SPY and the NASDAQ are up in the after hours. So really the 200 level is going to be the main level of resistance moving forward. And then of course 201.50. And aside from that, you know, we just have to see if this, you know, inverted head and shoulders plays out. And if it does, the upside target would be above 205, 207. So, you know, that is a potential to the upside. We just have to keep monitoring whether or not this plays out. There's not really much else to talk about on the IWM. Let's go ahead and take a look at the large tech stocks, the 30-year bond, and the NASDAQ. And basically the large tech stocks were what? All right, let me go. Let's go ahead and start that first. All right, so this is Apple. All right, so intraday I tweeted that, I'm not even going to show you guys, but intraday I tweeted that Apple, Microsoft, and Google were still holding pretty well, even though you know, the NASDAQ was down so heavily. So the fact that those three stocks, $1 trillion companies, held so strong was a good indication that even if Amazon had bad earnings, these stocks could help lift the rest of the market up. So you can see right now, Amazon or Apple only down 1.6%. At the time that I tweeted it, Apple was green, Microsoft was down 1%, and Google was green. But the NASDAQ was down 2.5%. So that's a really, really positive, bullish discrepancy. We want to see the largest tech stocks bullish when the ETF and the indice that they're in is more bearish. That means that these stocks have the most strength and they're holding the market up. So if you want to see strength in certain stocks, you want to see the strength in the stocks that matter the most. All right, and these are the stocks that matter the most. Apple, you can see that it, it didn't really hold, like there's no real support. 172 is like a nice mental level of support. But aside from that, it didn't really hold at any decent levels of support because the NASDAQ closed on its lows, right? So that was just something I was watching intraday. So Apple held pretty well intraday, right? Microsoft ended up really, really falling intraday. But even though, you know, Apple and Google didn't fall as heavily, and Microsoft held this level of support really well. So it held 390, which was very, very nice to see. And you can see that it's up in the after hours. It's above this 305.65 level of resistance. The next important level of resistance, and you could also see that Microsoft is moving, the Bollinger Bands are moving similar to the 30-year bond. So we're going to look at that also. And basically Microsoft, when the Bollinger Bands squeeze together, there is usually a very, very violent move to either the upside or the downside. And we're going to catch that move. All right, so Microsoft held that level of support before closing, which is good. Let's take a look at Google. So Google, it also, it was green at the time, but I guess because it, rallied so heavily, a 3.6% drop compared to it gapping up like this and the NASDAQ being down 4% at the close is not the worst. You understand? So I was literally just looking at the numbers of how dramatically we'd fallen. And it didn't make any sense. And I saw that there was strength in Apple and Google and Microsoft at the time. So I took that as a bullish opportunity to go long and alert some longs for you guys. And I'm glad that those worked out. So Google, obviously, it has resistance and support, whatever, at 29.05. So again, Google is green in the after hours due to the strength of Amazon's earnings. So all of these very, very important. Tesla is doing really well as well. Ford had earnings, so Tesla is green as well. So let's take a look at the indicators. Obviously, for Google is going to be very, very overextended. Microsoft, you can see that the MACD is falling much heavier, but the yellow MACD line is starting to show a lot of momentum, which is very, very bullish. And same for Apple. The yellow MACD line, this is exactly what we want to see on the strongest tech stocks. This yellow MACD line is starting to show tons of strength, okay? And that's a very, very good sign. So I guess really, like, all of the large stocks are showing a lot of strength. And of course, Amazon now, it it broke above 31.27 is a very important level of resistance. Broke above that, and now it's trading back at these three very, very important levels of resistance here. So 32.79, 33.12, and 33.38. If we can break above 33.38, really, I think this can really hit like 3,500 in the next like month or two, and that's going to be a really, really wild move if that happens. And congratulations to all of my friends that were holding on to Amazon Lotto calls. I didn't alert anything on Twitter, but yeah, wow, like that's going to be amazing, man. And dinner is definitely going to be on you. And we're that's awesome. So yeah, so basically what I want to show is that all of the large tech stocks, the momentum is starting to shift upward. And those particular stocks were holding and showing a lot of strength intraday. So I took that as a positive sign to go long into the NASDAQ, and that worked out really well. So there's that. Let's go ahead and take a look at the 30-year bond. All right, so the 30-year bond, so this is good. You can see right now that the MACD is about to cross down below. So the MACD, you can see this blue line is about to cross down below, yet we're consolidating within this range here. And that is the best case scenario for us in the short term. Obviously, the long-term outlook of the market is extremely bearish. I'm not denying that. But as traders, we have to trade up and down to maximize our profits. All right, so clearly you can see that the 30-year bond closed bearishly. We closed below this level of resistance at 155.13. But I expect, obviously, since the entire market is green after hours, that the 30-year bond is going to be bullish as well. And you can also see that the Bollinger Band is very, very close now. All right, it's so usually, maybe tomorrow, if we have another day of consolidation, the Bollinger Bands can get even more squished and then eventually touch the candles. But we're getting very, very close to a very strong move in the 30-year bonds, in my opinion. And whichever direction this moves in now is going to be the main indication of which direction the NASDAQ moves. Because we know that if the NASDAQ goes up and the 30-year bonds go up, right, then the NASDAQ also goes up. So tomorrow's Friday. Friday and Monday are going to be very, very important and interesting days for the 30-year bond. And currently, you know, yes, we did close red, whatever, but it was basically I only bought because of the extreme weakness in the NASDAQ percentage-wise. And I also wanted to take a stab at some Amazon calls. I was bullish on Amazon earnings. So, you know, the NASDAQ calls helped us solidify some of that profit as well. And yeah, usually, literally, guys, if I have ever seen the market down 3.5% or 3%, I would just blindly buy into calls for a few weeks out. I wouldn't even think, I wouldn't even care. I would buy in light. If we fell lower the next day, I'd buy heavier, because statistically, it's almost impossible to fall that much without it bouncing back. All right, so that's usually what I play. Instead of trying to short the weakness, so instead of shorting extreme weakness, it makes way more sense to scale into longs. All right, and that's basically what we were doing this entire time. It worked out perfectly for us. So, you know, there's no reason to fix something that isn't broken. So, yeah, so there's my analysis for the 30-year bond. Now, let's go ahead and take a look at the NASDAQ. So, yeah, I already basically talked about that. This was not a bullish close at all. This was just me buying into something that I couldn't really justify to you guys until it worked. All right, we closed below 355.56. I waited until 355. I waited until 355 to 356. At that point, I think we were still down like 3%. So regardless, as we continued falling, I was just going to continue buying. I ended up buying into some like really like shorter term. I bought into this, like a bunch of calls, and because again, when the market is falling the heaviest, and when you're expecting the market to continue falling, and when you're the most bearish, and when you're the most fearful, hedge funds and banks look for that. Okay, they see that, okay, regular retail traders see that the market is down 4%. We're going to take advantage of that, because people short weakness. They wait for extreme weakness like that. Imagine how many people bought into puts. I can guarantee you so many people bought into a lot of puts at the close, because they're like, oh, it's going to continue going down. They looked at the indicators. If you've been watching my videos and you saw the indicators, you'd be like, oh, this is bearish as hell, man. We're going to go down. We're going to fall. The RSI barely made a small drop, even though the indicators looked bearish. All right. The close looked bearish, but it's not always 100%. Okay. Not all of this stuff is 100%. You have to look at everything together. And, you know, that's why we're here, folks. And it worked out. And the NASDAQ is at 361 after hours. If the NASDAQ even opens at like 360, 361 tomorrow, those calls are going to be up pretty well. And it's going to be really, really nice. And I hope that it does, man. It's going to be amazing. So immediately, all right, 358 is going to be the level of support that needs to hold. All right. Then obviously 360, which is a very important psychological level. But then 362.17 is the 50% Fibonacci level of this downward move, of the bear flag that's being formed right now. All right. If we can reclaim that level, that's going to be very, very bullish. I'm not sure if we reclaim and close above that level tomorrow, but that is going to be extremely, extremely bullish if we do. And truly, I mean, that's really it. Right now, the market is very, very bullish. Not really much else to say. The NASDAQ, yeah, man, honestly, like the plays worked out. We alerted some swings. They worked out. Sorry, not swings. I alerted a day trade in the morning. That worked out. And now this trade right now also clearly worked out. So hopefully in the morning we open up even higher and the NASDAQ does touch 365. And then all-time highs hopefully this month. That'd be great. So yeah, yeah. So again, we're going to remain bullish on the market until the Fed actually implements macroeconomic changes to the economy. Until the Fed actually comes and changes interest rates, or they change how much quantitative, until they stop quantitative easing, that's when we're going to start being more bearish. But right now, the market only has one way to go, and it's up. All right. So yeah, it worked out. And yeah, there's my analysis for the stock market. Let's go ahead and take a look at the crypto market. All right. So Bitcoin is holding this 36,200 level. This is not the best sign for Bitcoin. Obviously, like, it doesn't have any earnings or anything that'll help like shoot it up, right? So you can see that the yellow MACD line is very stagnant, and the MACD is pointing downwards. All right. The RSI is also flat, even though we had a huge red day, and that is not the best sign. It means that Bitcoin can, fall back down, and essentially, if it breaks down below 36,000, it's going to end up retesting at least 35. And then I can see that, if 35 breaks, we're going to hit 32,000. We're going to hit this level here. And yeah, I've been saying that we're going to potentially touch this level. And right now, technically, Bitcoin is not looking that good. All right. So really, there's not much else to say. You can see that we broke an uptrend level here on Bitcoin as well. So there's that for Bitcoin. Let's take a look at Ethereum. Ethereum looks even worse from a technical standpoint. The RSI still has tons more room to go to the downside before it becomes oversold. And the MACD is much, much higher. And this is not what we want to see. We want the yellow MACD line to start moving upwards much, much more, similar to what was going on with the tech stocks and what we were looking at in the indices. But this isn't a good sign. It means that the market can continue falling lower. And yeah, essentially what we need to see is a hold of 2,500 on Ethereum. If 2,500 breaks, then we can easily see the 2,300s, these two support levels here. And then if those break, that would mean that Bitcoin is essentially at 33,000, and then all hell can break loose. So yeah, there's my analysis for the overall market. I hope you guys enjoyed the video, and I will see you guys tomorrow. Thank you.